We've got a crisis in North Africa. Some people view it as negative, some people view it as positive because democracy is coming. But in terms of Africa and the risk that we could see defaults here, who is the most at risk?
I think, Godfrey, given what's going on in North Africa, the Middle East, surely this is going to have a knock-on effect for a number of countries in Africa. But I think the most salient point is I don't think there's reason to press the panic buttons just yet. Oil hovering nearly $120 per barrel.
Yeah.
I think there are certain fragile countries who have been running large fiscal deficits, or perhaps some pressure on the current account budgets. For example, Zimbabwe may experience severe problems given their current state. Zambia, which has now reached around 39% of their total imports being petroleum products. Botswana, perhaps. But I think one of the key things that we need to remember is that these countries do have 5-6 months, 4 to 5 months at least, worth of import cover. I think there's generally what we're seeing is that there is going to be some support in terms of OPEC production in oil. So I don't think really that there is such a risk of default by any of the major African countries. I think what certainly is going to be happening is we're going to see continued inflationary pressure and pressure on those current account deficits.
Let's talk about that inflationary pressure, because we have seen it spreading across emerging markets. Now we're beginning to report it in our African countries. We've been reporting on the inflation data for February as well as January for some of the African countries. And the general pattern that we've seen, particularly coming out of Eastern Africa, is that inflation is indeed on the march. From that perspective, who would be most in trouble in your book?
Well, I think what we need to look at is we're going to need to look at closely at food prices.
Right.
Naturally there's a natural correlation between the price of fuel and food prices. But coming back to Mauritius, for example, where possibly around 10% of their transport costs is made up of that potential price basket. I think there could be pressure there. We could also see, because of the droughts in Kenya, lesser use of hydroelectric power, more use on diesel generators and reliance on diesel. We could see a surge in price on both, in terms of a basket of goods as such.
Now, there are other countries, of course, who have managed their affairs pretty well, and I think we can mention a few examples here. I would venture to suggest that South Africa's situation looks pretty much better off when you compare it against other African countries. Now, are there any other countries that are in a strong position to weather this kind of financial crisis, such that you would say, if you were a foreign investor looking inside Africa, or an African investors looking at the overall African picture, who would be safest, would you put
Well, if you look at typically, those safest countries will be firstly the ones who are net exporters of petroleum products.
Right.
Those are the ones who will have the natural hedge.
So your Angolas, your Nigerias, your Equatorial Guineas.
Correct. But what you also need to remember is that there are a number of African countries who are commodity exporters. As a result, they'll have a natural hedge to countermand the effect of the high petroleum prices. But I think if you look at Cameroon, for example, they will be in a better state. Ghana, whose petroleum production is now coming on stream, will countermand the impact of the oil prices as such. We're also looking at Uganda, who will probably experience some initial pressure, but then with oil coming onto stream. So I think there are certain countries that, particularly like Cameroon, that would benefit. Incidentally, Ivory Coast, who is a net producer of petroleum products. Given their current state, it might be a bit dicey, given that the political situation may result in a decrease in production. But they could be in a sort of fairly neutral state.
But no, that's at the national level. Let's talk about the banks level. Now, we do know that Nigeria has had issues to deal with its banks. In Kenya, however, the situation is very different. We've got banks that are reporting, I wouldn't say bumper profits, but very, very good earnings indeed.
Decent profits,
Across the African banking spectrum, if I can ask you to be broad and general, which countries do you see as whose banking system is perhaps could be impacted by the current crisis?
Well, it'll be difficult to predict. I think every country is varying. One thing we are seeing is we're seeing that the impending risk, or the cost of risk, is going to be increasing in Africa. As we sort of see higher oil prices, naturally, to give you an example, importers of those particular fuel will have to pay higher for the cost of that particular risk in confirming their letters of credit, etc. And that is going to be having an inflationary pressure. Generally, what we're seeing is that we're not seeing sort of any signals from banks that this particular pressure, what's happening in the Middle East and North Africa, is really impacting banks' balance sheets right now, per se.
So on balance, if you were to look at this whole thing, Suresh, your view, if I may sum you correctly here, is that the crisis, yes, will have an impact, but overall, like we weathered out the three other crises that we've had in the past few years. We had the fuel crisis, we have the food price crisis, we had the inflation crisis as well in the lead up to the 2008 financial crisis. Africa is in a better space financially to withstand the current turmoil that we have seen in the north of Africa.
Absolutely. I think certainly their balance sheets, the state of their economies in terms of macroeconomics is far in a better shape than what we've seen in previous years. And I think certainly with the current commodity prices being where they is, I don't think there's reason for us to panic just yet in terms of any sovereign defaults.